Good evening everyone and welcome to session recap 25th of April 2016. My name is Nenad. Today I will show you Euro dollar, Pound, Australian dollar, Dollar CAD and Euro yen. As you know, last week was okay, it was good, not very exciting concerning session recap trades, but we managed to make like 120 to 150 pip pool. That is not bad concerning that markets were really well, most of the Thursday and Friday were not that correlated. Now if you compare Forex market to current stock market, at least on intraday time frames, by using correlation matrix, you will see that correlation between let's say euro dollar and DAX has been lost, and you might find some this ranging market. You can find it also on intraday charts, and it clearly shows you that markets are being now, stock markets are now not correlated directly to Forex market. It will change, however. Now you might ask, what is the reason for that? I will tell you the reason is because market is waiting for FOMC. FOMC will be the major event this week. It is scheduled to happen on Wednesday, and as always FOMC brings a lot of uncertainty in the market. Because of that, your position should not be always to the maximum, extend to the maximum concerning target prices and a number of pips. Rather, you should try to protect your profits, no matter if you take my trades or your own trades. So that is what I suggest. You should definitely try to protect your profits, because the market is clearly waiting for FOMC. As you could see today, I did a dollar CAD analysis, and dollar CAD is also still ranging within the triangle, but at least it made a small breakout that was worth 20 pips. And I say 20 pips in ranging market is sometimes, well, it's good. So most of the time when you see that markets are ranging, and by now you should know when markets are ranging, when markets are trending, well, that is the time when you don't go for full profits. You rather protect your profits, mostly scalping and that. Well, Bob is saying good evening, Andrew, Nafisa, Nathan, good evening guys. Nathan is saying last night he made breakout retest trade on ODN, making 80 plus pips. Well done. Well, to be honest, well, last night it was early Monday morning. I don't trade on early Monday mornings. I never trade, to be honest, during early Asia session on Mondays, because simply yeah, the trades might reverse. Let's say that early session shows you a long, and usually during the Asia session it goes short. And I assume, Nathan, that you traded ODN, that I think I made the analysis on ODN that it should go down, or I'm not sure, but I know I knew that it would go down. But when market was open on Monday, early Monday, I saw it went up. Well, I was not sure when it will end, and after I saw Asia session close, I saw that ODN was definitely a great trade. But as I say, I particularly don't trade during Monday mornings, especially because I am in GMT time zone. We are very close. We are GMT +2 at this point, and I need to sleep and be ready for next day. But you know, market, as I say, market is there. It won't run away. So you don't need to trade every single setup. Yeah, if you're awake at these times, as I said, the best pairs for trading Asia session are yen crosses. And if you trade yen crosses, watch for correlation between yen and Nikkei index, between Aussie yen and ASX 200, between dollar yen, so-called ninja. And I'm preparing now, just a slight digression, I'm preparing an article that will be published next Sunday about Forex terms and abbreviations. So I'm not sure that how many of you know that dollar yen is called ninja, that dollar CAD is called loony, or the funds. Well, you will see that when I do the article. Yeah, that was the digression. So Aussie yen, New Zealand yen, you can go with euro yen, but I'm favoring Australian dollar yen, because guys, yen crosses are very correlated to equities, and you can make good number of pips just by watching what equities do, and then doing the similar analysis on Aussie yen or dollar yen, because dollar yen is very correlated to Nikkei index, Japanese 225. Okay, so before we begin, our standard risk disclaimer explain that online educational materials are available at Bear Markets Estonia for a global audience. So take into consideration the information session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets UK takes no responsibility for the information accuracy. This is solely my opinion, and be aware that this is not a suggestion. This is for informational and educational purposes only. Okay, with having said that, we are ready to proceed. Okay, yeah, you probably know about Admiral Markets Supreme Edition. You can download it in your trader's room. Also, you can connect to web trader platform and use it directly from the web. It's secure, so you don't need to worry about. It's very secure. It's a good platform. And finally, what I wanted to say is that actually, I am sure that you know that, but it's good to remind you that you can actually get 50% of deposit bonus. Try it. It doesn't matter that you need to, I don't know, to have it fully after you made some trades. It's a good thing, because at least what it can do, it can expand your margins. Believe me, guys, it's much easier to trade with $1,000, $2,000, $3,000 than it's with $100, $200, or $300 account. It's different, believe me. So yeah, get your bonus. It's a good thing always. Risk disclaimer concerning our session recap trades. All session recap trades and analysis is done with Camarilla MACD. You need to give price a breathing room. You enter within 15 pips. You can enter within 15 pips of the predicted level if it's in agreement with your system. It's called POC or buffer zone. So whenever you see POC on my analysis, and wherever I mention POC, it means that the price is expected to react. So translated to Forex terms, that is when you make your entries. So is the zone. We always trade in the zone. Use scaling in, especially guys, if market is not very good, in a good trend, or when market is ranging, or whenever you see that whenever you think it's appropriate, use scaling in. And you know what scaling in is. I think I don't need to remind you. It's a good thing. Not necessarily you need to use it, but whenever you feel insecure because the market is not moving that good, you can use scaling in, reducing your risk. And of course, respect your stop loss. You never ever move your stop loss, okay? Whenever your stop loss is, if you follow my setups, well, we don't move it. We only add the spread. Now the thing is, if you trade within ECN account, you will not have we will have a spread, but it's very small. The spread is like 0.3 to 1, 2 pips. It's nothing. So what I suggest is add at least 3 to 5 pips to your stop loss, just to be sure, guys. Because sometimes when volatility is not present and during a market close, you might see for 20 seconds maybe, or sometimes you might see spreads widening. It's only because banks and liquidity providers are not there to give the best prices. So whenever you see that, well, especially if you do overnight trades, that is your protection, because you just need to add 2 to 5 pips and you will be safe most of the time. We take one position only, okay? Only one position, guys, between all these positions. So you can take one position on every single pair that I present here. But you don't take both positional trades and alternative trades. We want to see one setup. I know that a lot of traders, because the analysis has been pretty accurate, a lot of traders have the urge to take two positions, both positional trades and alternative trades. I don't do it. You can do it on your own risk, but I don't do it. I only take one position, whichever hits first, be it a position, so-called trend trade, or alternative trade. And yes, that is doubling the risk. Well, if you made money, well, why would you take another risk to lose the money? I always say first touches of the zones and levels are most profitable ones. So we trade the first touch within the zone. Now, if you see that the zone is still holding after 1 or 2 or 3 hours and you didn't make an entry because you came later and you see that the price is still there, you can take the entry, guys. What it means is, let's say that this is our zone, right? And this is 1 hour chart. So let's say that you have slept over, okay? And price does this. So 4 hours, 1, 2, 3, 4, 4 hours passed and you still didn't know what to do. What should you should do is you can open the trade, because price didn't bounce from this zone. Price is still within the zone. This was the first touch, guys, but price was still within the zone during next 3 hours. It means that you can take the trade. But if this happens, same example, but let's say this was the first touch and the price already made some pips, 30, 40, and it get back to the zone, you don't take it, because this was the time when you should have taken the entry. It happened because you were not close to your computer, I know, or maybe your pending order didn't hit. But well, guys, this is what I say. First touches of the zones levels are most profitable. First touch or first touches like this. This is still the first touch, right? Because see, the price is still within the zone. So that is always the safest way to go. Position trades are called trend trades. Alternative trades are called counter trend trades. Breakout trades, scalp trade levels are done independently. It can be a second entry, whatever. You can go with breakout trade if you see that there is a setup. You can go with scalp trade if you see that there is a setup. And you can always go with position or alternative. So this can be a second entry. Depending on time and volatility, usage of trailing stop is highly recommended. I never ever recommend taking less than 20 pips. Well, that is the lowest number of pips you should make. Well, if you see that the price is really going nowhere and it's taken too much time for the price to actually go anywhere, I don't know, 8, 9 hours, it doesn't go anywhere, take the profit, doesn't matter. But usually it will go. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Sometimes today's setups will not be valid on Wednesday because of Fed. So be careful. You can take the setups just prior to Fed. So it means today or tomorrow, or maybe a small trade in the morning on Wednesday, but not for full day, because it can be pretty messy. Okay, scalp trade levels should be done at or very close to important support resistance levels, so you should be careful about it. So we do it. If you see a scalp trade, you need to see at least the most 1 pip away from the level, because those are scalp. It's not positional trading or alternative trade. Okay. You can add these levels to your system. Okay, whatever I post. Pay attention to Twitter updates, because guys, as you could see from the previous week, we had revised setup for pound dollar. That was good for like 50 pips. Remember the flag setup on pound dollar, and it was good. So it was a revised setup. And pip pool is the maximum available number of pips you could have got on recap entries. And these are now past week results. 18 of April, so these are past week results. Euro dollar plus 30, pound dollar plus 90, Australian dollar didn't qualify, dollar CAD didn't qualify, euro yen plus 30, and or minus 30, guys, because this setup was good, but then it went in a loss. So if you traded at the right time, you could have made 30 pip. Okay, you could have made a 30 pip, but I'm not sure. I will show you. And total pip pool was 120, 150, and pound dollar was a trade of the week. Okay, so let me now show you what happened last week. Okay, this is euro dollar. You see, I said pay special attention to 1350, 60 possible short. Okay, see here, it was here, and it rejected straight from this level. It was very good. And then what happened? Okay, this was our entry. Later, 2 days after, this happened. Okay, I still counted only 30 pip because this was late. This happened 3 days later, right? But guys, as I said a lot of times in the past, if you see this happening, if you see that this level should hold, by using your own knowledge, use my leverage. What it means this is the leverage for you guys. This is the leverage for you. Okay, so you can see I give you the setup. It can happen even after 3 days. I don't count this as a setup of recap, but just for you, it can be a good guidance, a good cue where the price could reject, at least for a scalp trade. And this was a huge rejection, guys. This was pound dollar. Okay, this was pound dollar. And you can see here, pound dollar, first we had an entry here, 43.35, well, almost to the pip. And here, see, entry, here, bang, rejection. And what happened later is a revised setup. Okay, this was warning. Well, something happened later. After this setup, I made another setup. And if you follow this, it came to 44.12, I think, straight from this level. So you could have made some nice pips on here on this analysis. Australian dollar didn't qualify. We had a MPC meeting minutes, and this was our long entry. Price went long, but you see, it didn't hit our entry zone. So what I say usually is, even though if you don't see an entry zone touch, well, use this analysis to give you guidance where the price should head in, especially if you see this. You know that market is in uptrend, and try to use your own system or some PNT principles, okay, whatever, to find at least some nice trade that can give you that can give you an entry or something. Dollar CAD also, guys. Dollar CAD didn't qualify. This was our sell spot. And I thought it should go down. Well, it went down. But again, it didn't pull back. Sometimes when market is in a strong trend, it won't happen. We don't see a pullback, we just see a straight drop. I call it a direct drop. Okay? Euro yen, well, this was twofold trade. This was basically here an entry, a sell position, and this was target price. Well, it was not full target, this was the full target, but this was the maximum number of pips you could have made on euro yen. Well, what could happen is you could even, if you made an entry here, you could have used these levels here, this zone here, you see this zone here, this level, to actually take your profit. At least if you saw some rejections here. Or if you went fully, you might have lost the trade. But whatever you do, pay attention to price action. This was, see, breakout here. Breakout. Wait, it's not. Here. And the price retested it to the pip. Breakout. This was the retest, guys. But from this point, we had a short trade. I am sure, yes, Nathan, I'm sure that if the price proceeded down, we would at least made it to this point. But if you see this candle, assuming that your entry was here, well, what you can do is close the trade, because this was clearly meant to go up. Clearly, and I'm not, guys, I'm not saying even euro dollar. You remember my analysis on euro dollar on Friday. It went to target price. Now it can go up. I will show you that. Okay, before we go with, okay, here you see, guys, now I'm long. And I still want this. Guys, I still want this. This is the same what I want to see as previous week. Guys, this is what I see now. Why? Now let me show you this. Just give me a second. I know that a lot of you follow me, so I need to show you what I did, the analysis I did with Forex Street. Here, Forex Street analysis on April 22nd. It was Friday. Yes, this was good one. Okay. Break of neckline is in progress and euro dollar is targeting 1220 and 1160. 1290 is interim resistance. What happened here, guys? Yeah, the picture is small, but I don't know if I can, like this, it's not big quality. I always send them HD pictures and screenshots, and they keep posting it in low format. I assume that is because they need also to optimize this for mobile phones, so the snapshot shouldn't be higher than 150 kilobytes probably. So this was it basically. It went to the target, to the first target, guys, here. It went here, but it didn't proceed down. It didn't proceed to the downside. So what can happen is actually that euro dollar now spikes. Okay, because, well, we saw a nice break, but unfortunately, we didn't see a continuation. So market change. Correlation has been lost today. Okay? And this is euro dollar now. See, it's going up. So my stop loss now is 1220. I'm long. So let's see. Maybe I'm wrong. It looks, but Guys, this is still the same what has been happening. Range play. And it could be a range play till Wednesday. Okay? Look at this. DAX correlation, euro dollar, intraday time frame, H1 200 bars, zero, guys. No correlation between equities and euro dollar. Well, equities now are not doing that great, so I assume this can be also a hard times for equities traders. Well, also euro dollar, I don't know, maybe I'm wrong, guys. Okay, maybe I'm not saying this is hard to say now, but this is what I see now, really. Again, I'm doing with this. Maybe I'm crazy. Call me crazy, I don't know. But this is what I see the best from risk to reward setup. Nafisa, it doesn't matter if this is hourly, 4 hour or daily. This is the zone. The zone can be either on 1 hour or 4 hour. So time frame is not relevant. Okay? Because I do the calculation. Okay? Because this is not a system. Camarilla MACD is advanced method of analysis that predicts entry zones, targets, and stop losses. So it's not a simple system, guys, as EQ pivot point is. This is not for novice traders. Camarilla MACD is solely my creation, and it only has to do with advanced price action knowledge, and some of the knowledge you can, of course, at least 60% of the knowledge is PNT course that is actually free for Admiral Markets. It's price action trading school. So 40% is purely Camarilla MACD, but 60% has been taken from PNT, that is price action trading school. So what I want to say, this is the zone. You don't care if it's 1 minute, 5 minutes. This is the zone. And the zone is where price reacts. I don't know, Apostolos. You can buy it here, but this is your stop loss. And I suggest that you go with low risk because of this. You will have like 50 pip stop loss, but your risk should be 0.5%, not more than that. Calculate per your account. This can also happen, but this setup now is in progress, guys. It's in progress. You can scale in if the price pulls back. I'm not sure that, as I say, it's hard to say when you don't see a clear picture. I know that price has respected the analysis on Friday, but what bugs me is this level holds. We have strong momentum candle now in progress on 4-hour chart, and still, guys, there was a bad news for euro today. Not bad news, it was softer than expected news. Okay, softer than expected German numbers. And the price was in uptrend today. It was bought. So it has been bought. So you see, every dip has been bought. So this could be an order block, bullish order block here, this candle. The height of bearish candle, guys, is bullish order block. Remember our analysis. Price action trading school. So this could go up. Yes, it means that they have priced in some of future news, Nathan, indeed. And they're very cautious. They're very cautious because of Fed. So bullish order block is the height of bearish candle prior to breakout. And this is the height of bearish candle. Price goes up, and you see it was downtrend. This was height of bearish candle, bang, it goes up. So this could go up. As I say, it's not that very, very clear setup, but I need to use confluence and previous price action to actually pinpoint the future price movement. Yes, Egils, this can go up. Look at this, guys. Look, this is historical. This can be even, let's see, I'm not sure that it is. I'm not sure why it isn't showing my, why my 89 exponential here. Yeah, it isn't still, but see, yeah, this is containing the price now. You see on 1 hour time frame. If this breaks, guys, this goes up. On 4 hour time frame, it still has the room to go up. But look at this. In the past, look, if this was E89, this could be T89. Look at this. Strong buying here. So guys, from this level in the near-term history, we had 165 pips to the upside. That is why I cannot sell now. That is the reason why I cannot sell it now. That is the reason why I said, guys, this could be a long trade. I cannot sell here, guys. This was failed breakout. And it happened on Friday, right? On what is this, guys? The 1220 still holds. So that is the reason. I might be wrong, but that is what I see. You see, warning, FOMC, trade valid before Wednesday. Yes, you need to watch what LH, if you assume lower high, well, yes, the price needs now to actually close above this and proceeds at least towards this region here. But you see, I'm long already, so I have my stop loss in place, my risk is in place, so let's see. Pound dollar is uptrend, buy position 44.50, stop loss 44.15, 45.50 is target. I would sell here, and still the warning applies. Okay, guys, so still the warning applies. Okay, you don't want to actually trade during FOMC, guys. You don't want to trade during FOMC. This is clear uptrend at this stage. W, this is Dinas, this is W. See this? W bullish. Here you have the cue that the price will go up. Retest, breakout again. See, W, this is bullish. And now, what I would like to see is actually either this or this. Buy here, sell here. 44.50, because in the past, 44.50 was strong here, see? This level should hold. It broke to the upside. But sell position is here. 70, actually a bit higher than H5. Look at this, guys. Double, triple, almost triple top, you see? So pay attention if it happens. See? Pay attention, guys. It can be that the price is actually going to retest this region and then sell. So if we get a sell setup, I would sell it. Of course, I don't want to wait. Trade value before Wednesday, or at least during early Wednesday morning. Same with Australian dollar, it's in uptrend now. We can buy, we can sell. 76.80. Okay, sorry, this is wrong. This is good. and this is 76.40. I will correct this. So 76.40. 76.40. Let me, just for future reference, I will change this. Okay, let me correct this. So Australian dollar 76.40 is stop loss. And from next month, I really expect that the price will give us even more pips. I think so. Because usually now, guys, it's a bit, you know, we have a month end. Now it's still not summer profit taking, so I think that next month can be good. So this is Australian dollar. And the reasons for this, let me show you the chart. Australian dollar. See here, 76.80. Let's call it like this. This is the zone, so you might actually, you see 88, 80. See, 1, 2, 3, 4, 5, guys. If the price in now moment will respect the history, this could go up. Because in the recent history, this went up 160 pips. So I at least expect some good pips after the rejection from this zone. Okay, 76.80 is buy, 76.40 stop, 77.65 is target. 77.65 is sell, 78.20 is stop, 76.90 is target. We take whichever position, whichever hits first. We don't want to gamble, so we take only one position, either long or short. 77.65. Here, guys, see? It could reject again from this zone. Triple rejection from buying POC and triple rejection from selling POC. See? Bang, 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 bang. Let's see what the price will tell us. This looks like an uptrend indeed. Euro yen, or so-called yuppie, is actually, well, Dinesh, I will get back. Let me show you Euro yen. So this is 124.60, buy, 124.30 stop, 125.80 target. On Euro yen, okay, so yeah, this is daily Camarilla, indeed, Dinesh. Daily. See, it's still within the daily range. It didn't break through these levels. So I need to actually go one time frame above. Daily still valid here. See? What I wanted to show you is actually Euro yen. 124.60 could be a buy, guys, and we might see T89. Look at this. This is important level here, guys. Sorry. So from this spot, I think this E89 can go more to the upside. And here we might see even a T89. So pay attention to this zone here, and it should be supported with EMA 89. Stop loss will be 124.30. And I think that the price might spike from this level and go higher. Okay, so Euro yen trade. Again, trade valid before Wednesday. And finally, dollar CAD, same with today, guys. Just I added possible POC here at 27.40. So position sell is 27.40, 27.75, 26.20. Now I can only say, guys, now we don't have any momentum. So you should watch for additional momentum below 1.2678. BOC Governor Paulos will speak. Major news, guys. Don't trade CAD, dollar CAD on Wednesday, please. Even during early morning. A lot of CAD related news. But at this point, this looks fruitful to me. Dollar CAD has already made, as I said today, it made some 20 pips to the downside. It's still above 26.78. So what I would like to see is actually spiking to a spike towards 27.40. A lot of confluence here. See a lot of confluence. Because guys, if it spikes here, let me unray this. I will unray this. Guys, do you know this pattern? No, tell me, okay, there is some divergence, but tell me, guys, how do we call this pattern here? This should be easy for you. You're, yes, Nathan was the fastest one. Doug, not exactly. Okay, I'm waiting for your answers, guys. Okay, guys. I'm still waiting for your answer, guys. Yes, I see some answers. I need to tell you, now I need to test your knowledge, guys. I need to test your knowledge because this is price action trading school now. Okay, this is price action trading school now. I want to test your knowledge. Okay. Okay, enough. I see a lot of answers. Great. This is flag. This is not a pennant because it's similar, but pennant looks more triangle shaped and flag is exactly this. Yes. So this is, guys, a bearish flag. Nathan, not a pennant, it's bearish flag. Doug, not, it's ascending channel, but in this context, wider context, this is bearish flag. Head and shoulders, it can be a leaned head and shoulders, Nafisa, but this, what I have marked here is bearish flag. No, Dinesh, this is not descending channel. Ethan is saying bearish flag, Russian flag, bear flag, Michelle or Michael. If you are French, you are Michelle. Nathan, okay, channel. MENA FX Myron. Yeah, this is a channel, but in the wider context, this is a bearish flag. Yes, it's a bearish flag. Bob Strong, you're right. Gantas, you're right. Yeah, yes, guys, I don't have much time. I have only 15 minutes, so I will need to be very quick with this. Look at this, a lot of confluence here. Previous breakout spot, now moment sellers. This was breakout, this was retest, down. So this at least could give us some nice pips to the downside. So I'm watching for short here. And also, guys, additional momentum, if it breaks 26.78, look for short trades also. Now your questions. Yes, it can go with pole length, but I'm careful because it's very related to oil price. So I'm very, very careful indeed. Okay, very, very careful, guys. Because correlation to oil is huge. Questions now, okay. Can I roll the slides? Yes, just after I answer questions, I will do that. Ilya, no problem. I will roll the slides. Okay, the question is dollar yen. Dollar yen. Now I need to sort these pairs. Dollar yen here. What was the reason on Friday it rise suddenly? Guys, this is the easiest for you to go. Open 1 hour chart. Go with the correlation matrix. Okay. Now add dollar yen, or also called ninja, and add Japanese 225. That is Nikkei. Okay. Why doesn't it show up? Let me see. Add, save. Okay, guys. What is the correlation? Plus 84. So, guys, the reason why dollar yen went up is equities. It's Nikkei index, equities, DAX index, equities, S&P 500. Yen pairs, I have explained a lot of times in the past. Yen pairs are correlated to equities. So the reason why you see a sudden spike or a sudden drop can be equities. Dollar yen is mostly correlated to Nikkei, that is Japanese 225. It's also correlated to DAX. So during Asia session, watch Nikkei. During European session, watch DAX. During New York session, watch S&P 500. Simple as that. Now, what else? When will the AccuPivot Point trial be activated? I expect to be activated on May 9th. We should have a webinar. We will make a webinar for all of you who applied, and we will make also a PDF. Expected date is May 9th, guys. Nafisa, if we take a buy position, you say that you don't put a sell. Yes, only one position. It's either buy or a sell. And Nick, no, AccuPivot Points is not based on Camarilla, Nick. AccuPivot Points is a separate system. It's a system, it's different compared to Camarilla MACD. And Camarilla MACD is not that easy, but AccuPivot Point is perfectly suitable for building the account up. Okay? But usually they go in accordance. Okay, they usually go in accordance. If I see a short trend on, let's say, ODN on Camarilla MACD, I tend to use AccuPivot Point also for entries on short because they go in accordance. Camarilla MACD is very precise, so watch for it. So this is like institutional trading, Camarilla MACD. So guys, yeah, I don't see any further questions. So it was about dollar yen and other non-related things. So yeah, I will roll the slides again, guys, and watch for further analysis. As I say, guys, pay close attention to my analysis because we are always having some good pips on daily analysis, session recaps. And now market is raging, as I said, during FOMC, but expect markets to get in track after, well, just after the end of the month. So May should be interesting. This is euro dollar, this is pound dollar, this is Australian dollar, this is euro yen, this is dollar CAD. Thank you everyone for listening to me. I wish you a good week ahead. I wish you to be very careful and to make good pips. I will be here with you very soon. Cheers and trade safe.